and welcome to FinextraTV. I'm Liam Xavier, and you join us here at the Temenos Community Forum in Copenhagen. With me right now is Sai Rangachari, the Chief Product Officer at Temenos. Sai, lovely to have you with us.
Great to be here, Liam.
So we talk a little bit about AI, and particularly when we're looking towards the future and how banks can control what they're actually doing while still embedding AI. How difficult is that balance?
When we talk about AI, it depends on what they're trying to do with it, right? So if it's their internal process thing, that's on their thing, where they're rolling out Copilot or Claude Code or whatever internal productivity tools. But from a product perspective, which is the place where we operate with our clients, there are three non-negotiables for any banking client. If you think about banking, if you took a step back and think about banking, it operates in a very highly complex environment with one of the lowest risk tolerance because it's heavily regulated, because it's all about trust ultimately. So when we go to the bank and talk about AI, there are three words that are non-negotiable from what we've seen: explainable, auditable, and governed. And the reason for this is they have to be comfortable with the decisions that AI would make. So it needs to be explainable. They need the audit trail of all the actions that have happened that led to that point. So you need the auditability, and then you need to be governed, both on our side when we're building it, as well as human in the loop at every consequential step on the banking side as well. So these are core principles in all of our AI products, and that's what banking clients expect.
And so then if we're looking ahead to the future a little bit, what does a bank actually look like in the future of tomorrow, especially with AI embedded into it?
Yeah, so it's a pretty loaded question, but let me give you a couple of dimensions, right? So the first lens I would apply is from a customer perspective. What do you think the banking customer would want in the future? I think increasingly banking will become more conversational, where customers are not just transacting, but they're having conversations with their bank through the digital apps. So where if you're planning a trip to Turkey today, you would say, do I have enough money? If you don't have enough money, you have to make the decision to say, I'm going to go start a savings account and save towards that goal. But in the future, you could have a conversation, your banking agent is part of it, and it can detect the fact that you won't have enough money and start saving towards that goal. So conversational will make it seamless for the customers. I also think increasingly customers will have personal AI agents representing them. We saw this with OpenClaw, like one of the fastest growing open source projects on GitHub, personal AI advisors. It hasn't caught on to banking, but it's only a matter of time. And this is where agents are going to start managing your finances and other things. That's your customer view. Now, from an employee perspective, also, employees spend a lot of time on a couple of dimensions today. They hunt for information, they hunt for reports. They have to take a product manager who has to prepare a briefing. They have to go download reports from 5 different systems, assemble it, create a briefing and all that stuff. And then you got the other aspect of it, so sanction screening, all these discrete tasks. They're dealing with exceptions. They're drowning with all these judgment calls that they have to make. Now AI agents can complement them. So humans and AI agents working together, where AI agents can handle the volume and humans still are in charge of judgment and taste and strategy and so on and so forth. So the decision will stay with the human, but the volume can be handled by the AI. We think the bank of tomorrow is something that will solve for both of these dimensions.
And I would assume that some of the reason the agents hadn't properly caught up in banking is some of the nervousness, some of the need to be governed, and some of the regulations coming up in August. Is there a concern still that that's perhaps putting too much pressure on, or is putting a handbrake on banking?
No, not at all. As a matter of fact, I look at some of these governance controls as an accelerator for AI adoption. The reason I say that is ultimately it's about trust. Trust for your end customers to have on you and for you to have on your systems. In pre-AI, you trusted your people, you trusted the systems, you had your audit trails, you got comfortable. In the AI world, if anything is a black box, you are held to account on why that decision was made or what the audit trail for that one is. So if you look at the gist of EU AI Act or any of these regulations, it's about driving trust, But the way they do it is mandatory governance. You need to have the right controls in place. And of course, if you don't have it, you have hefty fines coming your way as well. So you're dealing with people's money, you're dealing with people's credit, their data. So governance is a necessity in this situation. So I'm actually looking forward to the EU AI Act. I actually think it will start scaling enterprise AI adoption.
I love that. We've heard a lot of people say before in the past that regulation is quite scary. It's a bit of a stopper. So it's nice to hear that it's really crucial. So thanks for joining the studio and sharing your insights.
It's great to be here. Thanks for having me.